Hello and welcome to CMS Forex News. I'm your market analyst Nick Nassad. Today is Wednesday, April 22nd, 2009. The UK economy saw its jobless claimant count rise by 73.7 thousand in March, a figure that was lower than expected, but still managed to push the overall claimant count to 1.46 million, its highest level since September of 1997. The first quarter has seen a rise in unemployment of 288,000, the worst since records began in 1971. With the economy continuing to struggle, steep job cuts are expected to continue. The International Labour Organization's unemployment rate for the 3 months through February climbed to 6.7%. The UK public sector borrowed a record net £19.1 billion in March as tax revenues declined. The government has been forced to spend more as a result of the recession, but the recession is also slashing tax receipts. The release of the annual budget also showed the government is set to borrow record amounts for the next fiscal year. The pound-dollar pair, which had rallied yesterday, fell again today, especially in New York trading, following a release of the UK annual budget by Chancellor of the Exchequer Alistair Darling, along with his growth projections. Where UK officials see their economy shrinking 3.5% this year, the IMF, which also released growth forecasts for 2009, sees a drop of 4.1%. The difference between the forecasts and also the projected annual deficit caused a rather sharp spike down in the pair, favoring the dollar, as traders believed Darling's projections were too optimistic. Therefore, yesterday's rally looks a lot more like a retracement of the fall from 1.5050 to 1.4480. Today, the pair set a new low just below 1.44, which amounted to a 280 pip move from today's high to today's low. Today's weakness in the pound was evident against its other key rivals, with the pound-yen pair sliding more than 400 pips from its open to today's low. The euro-pound pair, meanwhile, broke above recent resistance at the 0.8915 level, climbing to test the area near 0.8990. That was a 6-session high, and the biggest gain for the euro against the pound since March 25th. The pair has established an upward sloping line of support around the 0.88 level the past 5 sessions or so, following a downtrend in the pair. It started when it was at the 0.95 level in mid-March. The euro-dollar pair, after finding support near 1.29 the last 2 sessions, rose today, climbing above 1.30, though it found resistance fairly soon at the 1.3040 area as it ran up against the downward sloping line of resistance. The jump today came during the start of New York trading as European equities staged a late rally and U.S. equities moved into the green in New York morning trading after opening lower. The dollar was weaker against the yen overnight, rebounding slightly in New York trading but was unable to make much of a counter rally. From high to low, the pair dropped about 100 pips, setting a lower low than yesterday. A short-term level of support was cracked and then retested as resistance in New York trading, so we may be seeing a consolidation prior to a further leg down in the pair. U.S. equities forfeited earlier gains in the last hour of New York trading as financial stocks declined. U.S. housing data showed prices increasing 0.7% on the month in February. The release lags current conditions, but is a welcome sign as forecasts called for a 0.7% decline in prices. On the year, homes are worth 6.5% less, which is a deterioration compared to January, but better than the larger declines we saw during the fourth quarter. Australia's consumer prices rose 0.1% in the first quarter, a result that was lower than expected. That brought the annual rate down to an 18-month low of 2.5% from 3.7% in the fourth quarter. Lower inflation gives the central bank more scope to keep borrowing costs near a half-century low in order to spur domestic demand. The Aussie-US dollar pair slid overnight to the 0.70 level in conjunction with a pullback to yesterday's gains in higher-yielding pairs. Today's low hit a short-term upward sloping line of support established yesterday, and then it rebounded to the 0.71 level. The counter rally did not reach yesterday's high, so today's action is a consolidation within yesterday's range, and we'll see if there is any follow-through to Monday's sharp losses the rest of the week, or if the pair will begin heading upward in favor of the Aussie. In Canada, the composite leading index fell 1.3% in March, following a 1.4% drop in February. Contraction in the manufacturing sector intensified, while the falls in the housing and stock markets showed some improvement. The US dollar-Canadian dollar pair rose overnight before falling sharply at the start of New York trading. The pair did not manage to match yesterday's high, and it bounced off support at 1.2325 for a second straight session. Late New York trading saw a second attempt to test support as U.S. stocks rallied in the early afternoon, which helped the risk appetite in this pair. However, those gains disappeared and the pair remained in sideways action thereafter. Overnight, Germany and the Eurozone released their flash versions of manufacturing and services PMIs. Also, the Eurozone will post data on industrial new orders and its current account, while the UK will release a CBI report on manufacturing orders. Tomorrow, the US will post its weekly jobless claims and existing home sales reports. Canada will reveal data on retail sales, and the Bank of Canada will post its monetary policy report, which will be followed by a press conference by the bank's governor. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.